Well, the financial markets never cease to amaze, and whilst implied volatility is still very low in pretty much all asset classes, we've got a situation where the dynamic and the thematic that's playing through markets changes rapidly. And that's playing through at the moment, where the last sort of 5 days have been talking quite constructively about owning and having mining exposure, and that seems to have changed quite rapidly today. Really driven by this one-notch downgrade we've seen from Moody's. Now, the timing of that has come as a bit of surprise by the market. They've had them on their outlook, negative outlook, since March of 2016, and suddenly out of the blue they decide to cut them down to one notch to bring them in line with what Fitch have got as an outlook rating. And there's a good prospect that over the foreseeable future we're going to see S&P, Standard & Poor's, actually lower their rating to be back in line with these guys as well. Now, I think the idea of what's happened today is the idea you're seeing rising leverage at a time when you're seeing slower economic growth, and my personal belief is that we will still see that growth target of around 6.5% being defended by year end, but that's their number one priority, because of course falling growth does have an implication on employment and the employment rate, and of course in the communist community that they work in, that could create some sort of social instability. So they've got to defend that employment rate, and that means keeping that growth rate at around 6.5%. But they do have this newfound belief of looking at the leverage levels, the financial risks that are happening, and that lower growth has been part of the reason why, with those dynamics in play, that we have seen Moody's coming and lowering that rate by one notch. And what's importantly is they have increased or stabilised their outlook, so we're not expecting another downgrade anytime soon. And I think importantly for investors here, specifically in the bond market, is that we do know that China does run sizable current account surpluses and trade surpluses. So ultimately we know they're not really reliant on overseas funding, and therefore their bond market shouldn't be a systemic kind of issue for around the world. We haven't really seen much moves in the bond market today, but what we have seen in China is semantics playing through into other asset classes. Have a look at iron ore futures today. They're down about 6-7%. They've been absolutely smashed on this downgrade that we've been seeing, as an overseas agency once again tells them about the dynamics that they probably should know about within their own economy. The Australian dollar's come under pressure as a result of that. So you've seen good selling coming through down into sort of the mid 74.5 cents. You've seen mining stocks coming under pressure. The materials sector in Australia is only down 1%. It's not a huge move by any means, considering as we are seeing bulks under sizable pressure. As I say, iron ore futures are down very heavily. Rebar futures, steel futures, and coking coal futures are down quite heavily. It's not having huge ramifications. As I say, the sector's only down 1%. And the ASX 200 more broadly is flat on the day. The Japanese equity market's up a touch. And so it really does seem to be everything about China today, whether you're talking about these bulk commodities, whether you're talking about the Aussie dollar, which is a leverage play on China, if you're looking at the mining sector. That's really what everyone's focused on today. I think the other big section we're seeing here in Australia is the Aussie dollar's been hit by construction spending. That's fallen 70 basis points, and I think that's a story we're going to see throughout 2017. I think we're going to see a lot of construction work being put to one side, and that's going to play on growth going forward. So certainly everyone's been focused on this one-notch downgrade from Moody's and what it actually means for China, or what it's symbolising for China longer term.